Hi, welcome to the Market Alert for Thursday, the 7th of January 2016. And once again, for the second time this week and the second time in the new year, the Chinese stock market trading is suspended, down 7% again. And as I said the other day, expect the market to go down to the 3,000 level and test this back from August. This is going to be the interesting area once the market gets down to here. And if it breaks this, then we continue lower. As it says on Zero Hedge this morning, trading was halted at 5% and then at 7%. This is on Monday, of course, and then the same thing again today. So the market in the Far East, they're struggling. And I do like this here. I won't short the CSI 300 again. And all joking apart, the Chinese authorities have taken traders that have been shorting this market away from their families, and some of them have not actually been seen again. And if you don't believe me, just do a search on Google for it. Anything to keep the Ponzi scheme alive globally, which also begs the question, when are the Fed going to throw in QE4? How much lower does this market need to go? At the moment, they won't be too concerned, of course, because they've got to keep face and credibility from having increased interest rates, which I said before December. And I've said all along, is pure financial suicide and insanity when all of the economic data points to a massive slowdown. The Baltic Dry Index, which is an index of goods being shipped. If I'll just find that for you and show you that. Just 1 second. Let me just pause. So here we have the Baltic Dry Index, and this is an indicator of the amount of ships that are moving goods around the globe. And you can see that we're at all-time lows now with regards to this. So there is no global trade. It is more or less dried up. We've gone from the highs in December 15. Let's just have a look, see where we are. 2014, sorry. Yeah, 2014. And we see that the index there was at 2,330, and then all the way down to the current price of 467. And this one is actually probably the only index that can't be manipulated. Of course, if they wanted to, they could, but because each day a record is kept of the amount of freight activity around the oceans, and that's what the Baltic Dry monitors. Also, more proof of the global slowdown. If you have a look at the Bloomberg Commodity Index, you can see that it just keeps making new lows. So again, there is a massive slowing in the Far East, which is why we're seeing this unwinding of the stock market. And you're going to see that in the West as well, because in the West, the Ponzi scheme, which is the Dow Jones, the S&P, and all of the stock markets, have been kept levitated by QE money, which is no longer around at the moment, and the US have put interest rates up. So it's just a matter of time before it all starts to gain some momentum to the downside. So as I said, before Christmas, when the interest rates went up, expect a fairly quiet Christmas, although you could get the odd day where the market moved very well, which it didn't really. We had a fairly quiet Christmas, and now we've come back. And again, as I said before Christmas, that it would start to get a bit lively, and sure enough, that's exactly what we're seeing at the moment. So let's have a look and see how the market's faring on the overnight. We'll start with the daily chart today, just for a change. You can see yesterday the market took out the 16,889, sent a note about this, and now it's just a matter of moving as low until we get some PPT support. It's the plunge protection team. So you can, all of these rising lows on the left, you can just take each one of them. You can see we're now below the 16,678. So the next downside target is 16,427. So the market down over 200 points already on the overnight market there. So we'll leave that one on the chart. And again, the ultimate downside target in the near term is the August low, which we have here at 15,254. We've got a bit to go, and we'll certainly find support in this area here as the market moves lower. But ultimately, if we take out the 15,254, I'm not going to say we're going to do that in a day by any means, but if this market continues this move to the downside, then it's going to accelerate, and this will be absolutely crucial at 15,254 there. So yesterday, nothing in the first part of the session. The price bars were too volatile to wide in range, and then later on in the session, obviously the downside's got the best side at the moment, not discounting the upside, because when the plunge protection come in, as you can see there, they will drive the market back to the upside as well. So good 50 points on the downside yesterday afternoon on this trade. In the news, what have we got? Anything of high impact at 3 p.m? Nothing today. 1:30 is the last economic news item, unless of course the Fed make any sort of announcement. But there's not enough fear yet in the downside momentum of this yet. But who knows? Following today, what could happen is with regards to the Fed making any sort of a statement or doing something. Nothing is beyond these people anymore. Anything to keep this, like I say, this Ponzi scheme alive that they've managed to manipulate for the last 7 or 8 years. A quick look at the implied 1755 up sharply from yesterday, and this is going to start accelerating if the underlying market continues to move lower, just like we saw in August. Watch out for a 100% increase in this. It will indicate a potential bottom in the market. So as long as the downside continues, the implied volatility will also move as well. But we've got to take out the high just under the 20% area there first, just to confirm that's what we're seeing in the underlying market, with the downside pressure continues at this time. Right, that's it for this morning. I'll see you in tomorrow's. We'll be in touch during the day if things get a bit more exciting. Other than that, as ever, thanks for your support, also for watching. See you in the next one. Thanks for watching.